Hello traders. Today we're taking a deep dive into the ABCD harmonic pattern, a powerful, easy to spot formation that guides you through high probability entries, stop placements, and profit targeting. Through detailed explanations and real chart examples, you'll learn how to trade ABCD with confidence. Let's get started. Here we explore how the pattern unfolds. The AB and CD legs mirror each other in length and directional force, while BC serves as a corrective move. This symmetry provides balance and makes the pattern visually and structurally reliable, giving you a concise framework to anticipate D and plan your entry. On a currency pair chart like EUR/USD, we can see AB rising impactfully, BC pulling back toward a Fibonacci level around 61.8%, and CD mirroring AB's length and momentum before D offers a reversal opportunity. In this section, we dive into how the BC leg typically retraces 61.8% to 78.6% of AB, while CD extends 127.2% to 161.8% of BC. Perfect confluence or symmetry, AB approximately CD in length and duration, further validates the pattern, boosting your trade's statistical edge. A chart of Bitcoin demonstrates BC retracing about 65% of AB, with CD extending to 127%, completing the pattern cleanly. Here we contrast the directional applications. In a bullish setup, AB is down, BC retraces up, and CD moves further down toward D. Bearish is the inverse. The geometry remains, but your bias, long or short, depends on market context and trend alignment. A stock chart shows a bearish ABCD where price forms a higher AB peak, retraces towards C, and CD extends beyond B, offering a timely reversal entry. The ideal entry is at D, after price fulfills Fibonacci criteria and offers reversal confirmation such as a candlestick pattern. Stops are placed just beyond D and targets can be structured, first at 38.2% of AD, soft target, then 61.8%, and if momentum holds, all the way to point A. On a forex pair like GBP/USD, the price reached D, formed a bullish engulfing reversal, then moved toward 38.2% of AD, early profits were booked, and the remainder ran to point A. Here we emphasize enhancing confidence. Look for rising volume on AB and CD, a drop during BC, or divergence signals on RSI/MACD at D. Also, a pattern's reliability improves when confirmed across, say, both 1-hour and 4-hour charts. A forex chart of USD/JPY shows ABCD forming on 4H and 1H, with RSI divergence at D reinforcing a long setup. ABCD thrives on structure. Not every zigzag qualifies. The risk comes when you draw patterns in choppy markets or ignore broader context like trend or support resistance. Waiting for confirmation and aligning with confluence reduces false entries. A volatile index chart where a drawn ABCD fails, CD overextends beyond 200% BC, invalidating the setup. Later, a better formed ABCD in a trending environment yields a successful entry. We started by unpacking the anatomy of ABCD, how symmetrical legs and retracement define the setup. Then we layered Fibonacci precision into our recognition process. We distinguished bullish versus bearish contexts, learned timing entries and exits, and saw how confirmation tools like volume and RSI sharpen our edge. Finally, we explored pitfalls and disciplined use to avoid misfires. By practicing these principles using real examples across markets, you'll internalize the pattern and wield it effectively in your trading.